Bitcoin's fourth halving is slated for next April. So what does this mean for miners? CoinDesk's special mining week presented by Foundry is taking a closer look at the current conditions around equipment, energy use, and diversification. Foundry and CoinDesk are both owned by DCG. Joining us now to discuss is mining analyst Anthony Power. Welcome to the show, Anthony. Thanks for being here. Thanks for participating in Mining Week. You wrote an article for CoinDesk all about this topic. So tell us about some of the key takeaways. Are you still with us, Anthony?
Yes, I can hear you.
Oh, yeah. There you are. So tell us about the article that you wrote for CoinDesk, some of the key takeaways.
Yeah, it wasn't the first article I've written on the halving. I also write content for Compass Mining, and I produced an article of them a few months ago. We're approaching the halving in April next year, and this will be the fourth halving. The first block, Bitcoin, was mined in January 2009, the Genesis block, and every 210,000 blocks, we have a halving. And so the miners who were mining back in 2009 were receiving 50 Bitcoin for every block they successfully mined. That reduced to 12.5 in 2012. In 2016, that became 6.25. And we're going now to, in 2024, the rewards will be halved to 3.125 Bitcoin. And that means that, miners who are mining now, when that date comes, if the Bitcoin price remains as it is at the moment, we'll potentially see, their rewards halved, and effectively, that means that, that your costs have doubled effectively overnight. And so my article looked at the ways that these mining companies, and I analysed the big North American public miners, but this will apply to all miners. This will apply to all miners globally. What the things that they would be doing, I'd be expecting to do between now and the halving itself. And I came up with 3 or 4 different points.
So I have to ask this because we've known about the halving since literally the day the white paper was released. We've always known this was coming. But people seem to think that this is going to be some sort of bullish event, as if nobody has ever heard of it, or that the retail public hasn't heard of it. It seems like this happens every so often. We hear about, if you just look at a chart of Bitcoin, the price of Bitcoin, and it halves, and therefore the halving is what causes the price to go up this much. But there are other factors, right? There's the network effect of people adopting or people trading Bitcoin at least. Is this really, is this correlation, is this a spurious correlation with price? Or is this an actual, is it causation? Because it just seems so, obvious.
Yeah. I personally believe that, miners will be looking back at the previous cycles to determine what's happened. And we have seen some consistency with the actual, with the halving itself. One thing that has been clear, the Bitcoin price hasn't always increased overnight in line with the halvings being reduced. So, one of my key points that miners should be looking at now is making sure they have enough financial runway to get them through at least 4 or 5 months after the halving. And usually by that time, the Bitcoin price has sort of like started to move. But as you quite rightly allude to, there are so many other factors that can affect the Bitcoin price. And we've seen that happen even in the last few years with regards to, macroeconomic factors, the war in Ukraine, and, so many things can affect Bitcoin. But it does seem to have that resilience. And even though there are many factors trying to bring it down, and you've talked through various of these on your channel before with the likes of FTX and Celsius, Bitcoin just seems to bounce back. It seems to be strong enough to take those challenges on. But from a miner perspective, I'd be expecting Bitcoin miners to making sure now that they have the sort of the most efficient mining machines in preparation for that halving, because you want the most efficient machines that use the least energy, knowing full well that you're going to get half the rewards. The second key point is really, the energy cost. We've seen energy prices come down since 2022, and we've seen a number of miners who've been able to lock into fixed price contracts, and that's going to enable them to help manage the situation. The cash runway is absolutely essential. These miners need cash to pay for their electricity, to pay for their staff's wages, to pay for their G&A costs. So that's important as well. We're seeing a number of miners starting to diversify into high-performance computing, artificial intelligence, hosting other mining companies. The first two, we've seen the likes of Hut 8 and Hive Digital move into that area, and Iris Energy, an Australian miner with currently based in the US. They're also considering using some of their capacity at the Childress site to use it for data centres. My only concern with that diversification is it sounds great at the moment, and we're hearing artificial intelligence mentioned in every other sentence. I just want to make sure the revenues actually follow those discussions and what they're implementing there. These are Bitcoin mining companies, and whatever they do as a sideline, there'll always be Bitcoin mining companies at the moment. I've spoke to some of the CEOs, and their expectation of revenues. This will not really impact significantly on what they're doing from a Bitcoin mine perspective, but it will bring some supplementary revenues and some reasonable margins potentially. So, it is something for consideration, because we don't know how long Bitcoin price will stay at this level. I can't predict the Bitcoin price in April next year. You can't predict the Bitcoin price. I can't predict the Bitcoin price tomorrow. So, that's where
to the club.
I want to touch on that diversification.
I never want to hear anybody ask me. They're like, well, you know anything about it. I'm like, just leave me alone.
Absolutely won't.
Stop, please.
I'm making a mental note to ask Lawrence that now every day.
Dare. I'll ask you about the Canadian dollar if you keep that up.
Anthony, I want to touch on that diversification piece a little bit more. It sounds like the mining industry is really solving a lot of the challenges, but it's becoming increasingly more difficult to mine, and hence the diversification. Do you see a lot of the miners that are operating now, diversifying completely into a different business as time goes on, as mining becomes more difficult? What are you hearing from the CEOs that you're speaking to?
The two companies that are sort of really looking to move into that space significantly, and the two I mentioned were Hut 8 and Hive Digital. Bear in mind, these two companies had a serious amount of GPUs when they were mining Ethereum before we had the fork last September. So all those fantastic revenues they were mining Ethereum with their GPUs stopped overnight. And they've then been looking for the next thing to do with those GPUs. Now, the GPUs that they have, I think they're high-end GPUs, so they've got plenty of alternative uses. I mean, a Bitcoin miner, an ASIC machine can only do one thing. It can mine Bitcoin, and that's it. But the GPUs have got other uses, and I think they're looking to sort of like move there. Will other miners move into that space? I don't think so at the moment. I think the big mining companies, the Marathon Digitals, the Riot platforms, will continue to grow. CleanSpot, add them to that top tier group of miners. They'll grow their hash rate in a sensible way, buying the most efficient miners on the market. And those three companies I've just mentioned, they've been buying miners this year and last year in readiness for this halving, and they've got serious hash rate ready. So diversification, not in terms of other revenues, but diversification in terms of looking to Bitcoin mine in other areas of the world. And Marathon Digital are already up and running in the UAE.
So, but to that point, I mean, would we see, for instance, Litecoin? You said that they can only mine Bitcoin essentially, but there are all these offshoots of Bitcoin that essentially run the same way. Would we see, as the price of mining Bitcoin goes up, this idea that, well, you know what, we're kind of set up. We could mine BSV, we can mine Bitcoin Cash, we can mine Litecoin. We can kind of go to these other coins that sort of use the same technology essentially, and it's costing us a lot more now to deal with mining Bitcoin. Why don't we just switch to that? I mean, like, who's going to suffer? Who do you see suffering the most with the halving?
The ones that suffer the most will be the ones that haven't prepared. So they haven't got, they've got machines that are going to require a lot of power. So not the most efficient machines on the market. And, the machine prices at the moment are actually quite low. Go back 18 months ago, people were paying 7 or 8 times the current price of what they're paying now for machines. And a lot of these mining companies did buy at 7 or 8 times the price, and they haven't got the cash revenues now to really start looking to change the older machines for newer machines. There's not many levers available to mining companies. They can sell Bitcoin, and most of them are selling Bitcoin every month now. Gone are the days where we're hodling everything. There's debt, but debt's becoming far more trickier, and 2022 was the year of debt, and we saw quite a number of miners. Some went into Chapter 11, and some nearly went into Chapter 11. So debt really is off the table for most of the miners. And the other option is to dilute the company, so to sell more shares. And 2023 will be the year of dilution for most of these companies.
Well, you want to name names?
I can tell you now that CleanSpark, Marathon Digital, Riot platforms are all selling shares. CleanSpark will tell shareholders are selling shares. They want to grow their hash rate. They've grown exponentially in 2022. They were the only miner to achieve their growth target in that year. They've got a growth target which was about 6 exahash in January this year. It's going to be 16 exahash by the end of the year. That's phenomenal growth, but that requires phenomenal investment. And you can't tap into the debt markets at the moment because the interest rates with the macroeconomic climate and also the climate around what's happened in the debt cycles in the mining industry, where we've seen a lot of defaults on loans, we've seen a lot of repossession of loans, we've seen a lot of issuers of debt fall on their face because they've not really looked into this too seriously and looked at how the price of Bitcoin not only affects Bitcoin itself, but it affects the actual machinery. So when Bitcoin price comes down, the cost of these machines, the value of these machines come down as well. And that wasn't anticipated by some of these lenders. And so, they've also fallen foul of what they tried to succeed in. I think I cover 15 or 16 of the biggest miners, and I would say categorically that 90% of those are diluting, regularly now. They've all got these at-the-market offerings, which enables them, and they're approved by the shareholders, so the shareholders have to approve the at-the-market offering. They can sell shares effectively on a daily basis. And you don't know how many shares they've sold until the quarterly earnings report comes out, and that's generally 5 months after. So in the next 2 or 3 weeks, we're going to see earnings reports from all these miners we've discussed, and we'll see exactly how many shares. And just as CleanSpark,
looking forward to that.
Highlighted what they what they've done the first 5 months of the year. They sold 41 million shares in the first 5 months of 2023 to help fund their growth.